Okay, folks, welcome to another Sunday Night Futures Live. For those folks that are new, what we do here first is we go over the futures action, the opening price action. Right now I'm watching the US dollar. We're going to talk a bit about the dollar. What I also want to talk about are some headlines that are out. A lot of headline risk that's out there, and it's emerging really quick, especially in advance of the election. And then I want to talk about the quarterly charts. How are we setting up for Q4? If you could believe that this year is almost over. So first we're going to go to the comments and keep an eye on the chart here. It's good to see that the dollar has pulled back off of its opening high. Will, hello? Will, where are you again? I read your comment earlier. Are you seeing prices fall in the city? Is that New York City? Maramigo? How about them Bears? Trader Isaac? Smash the like button? Yes, please. Smash the like button, everyone. Thank God. Nestor. Hello, sir. Brian. Emilio. Kat. Hello, Kat. WG Shocker. RL. Danny. Chuck. Hey, Chuck. Jedi. How is the sound? Is this any better today? I ran a test earlier today. It sounded good. But I have a microphone, it's the older one, on the side, just in case I want to switch to it. It's better? Okay, good. Good to hear. Okay. Himanshu, hello. OJ1. OJ1 Kenobi. Love it. Good to hear. All right, good. So we have sound. We have a great crew. All right, folks, let's get to it. Let's see what the dollar is doing. It's all about the dollar. We only have 3 trading days left to go, not just a month, but in the quarter. So the key chart I will be looking at this week is the chart of the US dollar, and the question that I'll be asking myself is, have we put in a new weekly high? Because that will set the tone for the remainder of the week if, in fact, we do put in a new weekly high. I am concerned about the performance of gold, silver, the miners, certain commodities, not all commodities. And I'm going to go over the quarterly charts of those in a moment. I'm even more concerned about the high-tech beta stocks, the mega caps. So let's kick things off with the 4-hour chart. These will all be 4-hour charts on Thinkorswim. And it's DXY that we're looking at off the highs of the session. No new weekly high. Good stuff. Since we're on the dollar, let's go to gold, see what it is doing. It did not have a good week last week, nor did I should have had this ready. The miners. Even with the dollar coming off of its highs, gold is flat on the session to down. We appear to be putting in a bottom here, short term anyway, a short-term bottom. But I'm going to go over a quarterly chart in a moment. Possible high or low here. All I really care about is, do we start putting in higher highs? Or do we put in lower lows? And we will reallocate very, very quickly our holdings in the gold miners. Lickety split. We start breaking down to new weekly lows. Gold just turned positive. I want to talk a bit about commodity names, because the charts I have on the quarterly basis are quite telling. And we're going to go over them. Yeah, this makes sense. Very strong chart here. We pulled back. Now we're rallying back. Wheat is a chart we will be going over. That was soybeans. Wheat has pulled back off of its highs, but still longer term, consolidating. We have stopped going down. The bear market in commodities, or at least ag, appears to be over. And a new bull rally is at hand. Oats consolidating a breakout. I want to bring up corn. There we go. Corn. Corn still consolidating gains. RSI weak. But still, the chart looks good. Let's go over to the S&P 500. We'll check out equities. We have the S&P 500 up about a 1/4 percentage point in the opening session here. It's early on. I don't sense much volatility here. We have broken out above a resistance level at the open here. Let's see whether or not it holds. You can see here. So what I want to know is, do we put in a new high versus Wednesday? That was the prior high. And you would suspect that if the downtrend were to continue, that Wednesday peak would act as resistance and you'd see a failure at that mark. And it's not arguable, it's undeniable. We've begun to put in higher lows and higher highs. But this is a 4-hour chart, right? So it's, for an intraday chart, it's significant, but it's a 4-hour chart. So we're going into the week looking okay. Let's bring up the NASDAQ 100. Those are your Trip Q names. They're very close to taking out the highs of Wednesday. I'm going to set up an alert here. At or above, we're good to go. Okay, so hopefully that fires off overnight into tomorrow morning. We're up over 1/3 of a percentage point on the NASDAQ 100. Good to see. So it looks as though what they're doing is it's the typical playbook. The beaten down names, the banks, what else? Energy. You're seeing money come out of those names and go back into technology. And this is what they're going to use to hammer the markets up higher. So the NASDAQ looking good here. It's going to be very thin breath, as has been the case ever since the lows of March, April. The Dow, consistent with the S&P 500. And there's a reason, I rarely talk about the Dow, but there's a reason why I am today. And I'm going to go to the chart in a moment. The Russell 2000, small caps, rough week last week, but we are opening up strong here, up nearly a 0.5 percentage point. And we have opened up above a resistance level, which is good to see. The question is, do we hold and gain or do we fade, right? So it's really early on right now. So we want to let's let these charts settle down a bit, let the futures settle down a bit. And before I sign off, if we have time, I'm going to come back through these really quick to see what's changed. Have we weakened? Have we gained? Unchanged? But thus far, we're looking good. I just want to circle back to gold really quick. Now negative again. The dollar. I don't know what just happened here. All right. All right, there we go. So the dollar broke out on a weekly basis last week. So the question is, do we pull back, retest, hold, and then break out? Watch the dollar. It's all about the dollar this week, folks. Let's bring up some headlines. So we are in a period of time where we've never seen so much social unrest since the 1960s. And you could argue that it's probably worse than the 1960s. I was a baby at the time, so I don't remember. But the social unrest doesn't appear to be going anywhere quickly. But what I believe has been financing and causing a lot of the social unrest, a lot of the divide in class, whether you be middle class, upper class, lower class, economically. Believe me, I know a lot of people that are so-called upper class, and I wouldn't spit on them because it's a waste of my spit. But when you take a look at the balance sheets here, the balance sheets are just continuing. You have the Fed in blue, ECB in orange, Bank of Japan in gray, the People's Bank of China in yellow. And they are just surging, moving up higher. And at some point in time, this is an appropriate photo, there's going to be a black swan event. What that is, that's going to prick this bubble, I don't know yet. I'm not that smart. Let's move on. We have, if nothing else, and I'm not getting into politics here, but this is reality. The evidence is coming out that there's huge corruption. Huge corruption. Anybody that questioned the deep state, whether or not it existed 6 years ago, 4 years ago, it's undeniable. It's here. And they know, if anybody's gone through the documents and the investigation so far that's been released, people are going to jail. Whether it's going to go all the way up to, Obama, I doubt it. But people are going to jail. There are a lot of people going to jail. And the only way they can avoid going to jail is if there's no second term presidency for Trump. What will these people do? What can they do? I don't know, but they're pretty nefarious. And they want power. And Lord knows what tricks they're going to pull out of their playbook before Election Day. So does this have me nervous? The number of people that are probably going to go to jail, or at least extremely embarrassed? Yeah, it does. There's a concern out there that the Federal Reserve has stopped being an activist Fed. This is posted in Zero Hedge. And they haven't done much bond purchases. The reason why the stock market rallied off the lows in April was because they were granted the power to buy corporate debt. And initially, they did so. But if they don't have to do it and the market's on its own feet, they're going to scale back on on those purchases. And they're going to save their gunpowder. So I'm not worried about this. People are worried about it. I'm not. And I'll tell you why I'm not worried about it. When you go to the Fed's balance sheet, you can see that while they pulled back off the highs of June, and I went over this on Thursday. If you weren't here, it's worth spending some time. And noticing that, this is a max view, I'm going to drill down, that the Fed's balance sheet, which bottomed out in July from its peak in June, has begun expanding yet again. So this is worth keeping in mind, that the Federal Reserve is still being activist because they know if they stop with the bond purchases, this market is going to tank. And I don't just mean tank. I mean, it's going to crash. So the next headline is off of Zero Hedge. In unprecedented reversal, NASDAQ shorts hits second highest ever. I'm a contrarian. When I read this, I don't get scared. I get optimistic. So the question we ask ourselves, we don't get arrogant and say, well, we're contrarian. This means we got to go buying the market. No, we have to validate whether or not we think that they're right or are they wrong. And if we believe they're right, are they right short term or are they early to the trade and probably right longer term if they can remain solvent and they could survive the short squeezes? So that's what we're going to talk about right now. I want to go into the quarterly charts because we're ending Q3. The final quarter of the year is generally a positive one for the U.S. economy. Granted, yes, October, nefarious, twice using that word today. I'm quite happy with that. Proud of myself. Nefarious, third time. It's a rough beginning of the quarter. However, it generally finishes off strong with the always reliable Santa Claus rally. There have been exceptions. Yes, I'm aware of that. But traditionally, we finish the year off pretty strong. So, to me, this is a contrarian indicator. Let's take a look at the quarterly charts. I want to begin with the tips. There's a lot of talk about deflation. I've been arguing that as long as we remain in a lockdown mode, that deflation is highly likely short term. People are done with the lockdowns. They're especially going to be done after the election. And the politicians probably aren't going to put up much of a fight. Why? They need the tax revenue. The states that are locked down the most, California in particular, they're bankrupt. They are bankrupt. And they're not getting any help from the federal government. New York, people are leaving in droves here. Droves. They need to open up these businesses to collect the tax revenue. So they will open up after the election. So the question then becomes, with all the money printing that's gone on, do we see inflation? Because production has come in a bit. You have fewer goods, and you're going to have capital chasing fewer goods. What happens to prices? You're going to have a rise in velocity in money, rising transactions, inflation heats up. So the tips are signaling to us on a quarterly basis, we're just off the highs of all-time highs. This is a very powerful chart. And it appears as though we're probably going higher. 3 trading days left to go. A lot can happen, but this is a quarterly chart. So it would have to be a dramatic move to the downside to make a real impact on this chart. Yep, I'll go over some of those symbols. Yep. Blue, docu. Okay. TLT. What are bonds doing? What's the bond market signaling to us on a quarterly basis? Well, you could argue that it appears as though it's topping out. However, excuse me, folks. I'm coming down with a cold. It appears as though we are topping out. I don't think so. I think what we're doing here is consolidating gains because we were overbought. You know what? Let's use this. We were overbought a couple of months ago relative to the third standard deviation Bollinger Band in red. So the trend on bonds is still to the upside. Therefore, pressure on yields remains somewhat to the downside. Now, we've stalled here. So while this chart to me looks fairly bullish, so do yields. Yields look like, this is the 10-year yield. Yields look like they are bottoming out. So the question we have to ask ourselves is, with an activist Federal Reserve, why are 10-year yields finding a bottom? Are they sensing what the tip market has been telling us? There's a concern about inflation. The TIPS, Treasury inflation protected securities, are at all-time highs. Why? We're supposed to believe that there's deflation. There are pockets of inflation, and the others are developing, leading us into corn. I went into the opening futures action on corn earlier. Here's the macro view. Here's the 100,000-foot view of the battlefield. Corn has stopped going down. In fact, it's put in its first quarterly high. I don't even want to, since what quarter was this? The April quarter, 2019, and the sell-off resumed. So over a year since the last time we put in a new quarterly high on corn. And it's the first time we have not put in a new low since the October quarter, Q4 2018. So while this is not a bull market by any stretch of the imagination, what I always like to say to members is that the first step to a bull market is for the equity, commodity, whatever you're looking at to trade. I don't care if it's cupcakes. It's got to stop going down. It's got to stop putting in new lower lows. We have that in corn. Where else are we seeing that? We're seeing it in wheat. Wheat stopped going down a long time ago. It bottomed out in the April quarter of 2019. So wheat is forming a huge base. I mean, when this thing breaks out, it's breaking out. Buy your Wonder Bread right now and freeze it. I don't know how you preserve bread, but man, stock up, because when this begins to break out, you're going to see wheat-based products rip through the ceiling in terms of price. Now, gold. Gold is a concern. I have to say it. You know, on a quarterly basis, it's less of a concern because we don't have a breakout on a monthly basis, on a quarterly basis. This is a monthly chart. I'm going to go to the quarterly chart in a moment. The reason why I'm concerned about gold right now is that on a monthly basis, which is set to end in 3 short trading days, we broke out in July, retested support and held in August. This month, a breakout point failure. We've broken support. We have 3 trading days to recapture this support level. That's why going into the new trading week, it's so important to keep an eye on the U.S. dollar. Why? Gold trades inversely of the U.S. dollar. The U.S. dollar closed strong last week. Also, when you go into, I'm going to bring up TrendSpider here in a moment. Oh, check out my TrendSpider swag, folks. They sent me a swag box. All goodies. Good stuff. Hat. Cup. Very nice stuff. Thank you, Team TrendSpider, if you're out there. All right, let's take a look at the seasonality effect here. Let's talk about this a moment because seasonality matters. Let's bring up the GLD. The GLD, going back 14 years, do we have more data than this? Yes, we do. Going back 16 years, the month of October is meh. It's up 57% of the times. That ends in November. November and December are seasonally poor periods of time for gold. What does better during those same time frames? Let's bring up the Dollar Bull ETF. In the month of November, granted, I was skipping over October here, which is poor. The month of November, the price action for the UUP is up 83% of the time. Huge, huge seasonality tailwind for the dollar, and that drops off in December. going back. So we have a breakdown at current on gold monthly basis. I'll become far more optimistic on gold were we to close back above 1923.70. As long as it closes back above that number, I'm happy. I remain bullish. If it fails to, Houston, we have a problem. So beware of being too heavily long of gold at current quarterly view. Big topping tail this past quarter. We are still very close, and we were above the third standard deviation Bollinger Band. When you go back into history, though, gold has done this many, many times. Last time was back here, July 2011. That didn't end well. Back here in January of 2008, we consolidated thereafter. A lot of volatility for several months. Resumption of the uptrend. Back here in the 70s during the stagflationary period, we remained elevated above the third standard deviation Bollinger Band for a year more. So we're not there yet. When the dogs of inflation are unleashed on this economy, expect this price action. We're not there yet. So gold, I'm very concerned about short term. Quarterly chart, S&P 500. This is a scary chart. We're in an ascending wedge formation. We're very close to the pinnacle. We did hit the upper band of the uptrend channel. We are rolling over now on Stokes. We are breaking down to new lower lows. There's not much that can be done about this. Think about it. We are up on the quarter. We were up last quarter. What is Stokes doing? They're rolling over. It's a negative divergence. Take a look at MACD. MACD, probable double top. RSI. RSI has been sending us signals for months now that what we're seeing here is another negative divergence. We peaked out here in July of 2018 on a quarterly basis. And we've had a negative divergence the entire time. The RSI has not been validating with higher highs versus price the rally in the S&P 500. Ominous. So what are we worried about here? I'm personally worried about the price action on the VIX. The VIX, I drew this cup with handle formation a while ago, a long while ago. A couple of years. Maybe not. Maybe a year. Because I had to form the handle, and I didn't draw this today. So we have a major cup with handle formation. We have broken out. Here's our big breakout on VIX, of course, during the COVID lockdowns. We have pulled back. What are we doing? We retested the 50-period moving average on a quarterly basis. It held. We bounced. We are now trading back above support at 22.50 thereabouts. And above, I should add another line up here, 25 is also support on the VIX. So what I'm worried about here are higher highs, a continuation breakout on the VIX. At least another surge. I don't think we're going to pierce through 85. Could be a lower high, and that may be the end of the correction. But I think that we are. Perhaps, we're going over quarterly charts right now, right? So don't wake up tomorrow morning expecting to see red futures because of the quarterly charts, obviously. It could take weeks, months to work out. This is the long game that we're playing here. So is it all doom and gloom? No, I don't. I think what we're seeing, and I was wondering why I kept getting the feeling that I should be looking at mega cap dividend paying stocks and buying them up. And I want to bring up an article that I ran across. And this led me to take a look at the quarterly charts, but other areas that I wouldn't have normally looked at, we're going to go into in a moment. Now, 84% of the S&P 500 assets right now are derived from intangible assets. Basically, Facebook. What does Facebook manufacture? Amazon. What does it really manufacture? It's more of a services business. So you have all of these services businesses. Yes, they produce certain things, but not on the scale of an IBM, not on the scale of an ExxonMobil. They don't have they don't have true production capacity to do this. They outsource a lot of the work that they build anyway, the products they build anyway. So you take a look at where we've been. Tangible assets going back to, these are the mega caps, going back to 1975. It was IBM, ExxonMobil, Procter & Gamble, GE, 3M. Huge manufacturers. But today, Apple, they don't build their own phones. Alphabet, Microsoft, Amazon, and Facebook make up the vast amount of the S&P 500. Yet, in terms of production of tangible assets, they don't produce much. So this leads me to start thinking, is there opportunity in areas that people don't want anymore? And let's go to those charts. Because I've been wondering, why is there so much strength in names such as the Dow Transports? The Dow Transports on a quarterly basis is on the verge, 3 trading days left to go, is on the verge of a major breakout on a quarterly basis. At current, we are trading above, as of Friday's close, the upper band of resistance and very close to all-time highs. Copper, quarterly chart, Dr. Copper. With all the doom and gloom that's out there, COVID, the election, all the other nonsense, social unrest, there are underlying indicators that implying that manufacturing may not be all that bad. All is not as doom and gloomish as it seems. Copper has been in a major, major base, and we have broken out on copper above a secondary downtrend line, a resistance level. It was resistance that formed back in October, January quarters, October, January quarters of 17, 18. Now we are attempting to break out above this primary upper band of resistance. You've got half the globe locked down. Why is there so much demand for copper? The supply chain shift, folks. That's what I think it is. Speculation, but I'm a speculator. I believe it's a supply chain shift. I've been speaking about it anecdotally, but now I'm getting more factual data. Transports breaking out. Copper breaking out. The Dow Jones U.S. Manufacturing Index. Oh, this is the mining index. Wrong chart. Where is it? I had it up here. I'll have to come back to it. I don't want to waste everybody's time. But we'll stick with the mining index. Huge breakout. And you're seeing names like industrial metal names like, we already went over copper, steel, while weak. It's not putting in lower highs anymore or lower lows anymore. It's beginning to put in higher lows. Is this a dead cat bounce? Maybe. Or are we seeing a W formation form here? Because remember that this period here through 2015 through 2018, that was the real heyday of the China build-out. They couldn't make enough sheet metal, rolled sheet metal, to sell over in China. So are we beginning to see a bottom get put in on a lot of these manufacturing names? Yes, precious metal names a bit toppy, but the mining names appear to be bottoming out. The industrial metal names appear to be bottoming out. I'm going to pop this article. I'm not going to go over it right now because we're running low on time. For your reading pleasure. I may come back to that in a future date. What else is going on? Forget this. More headlines. And this is why you need to do your own research or subscribe to the channel. Cheap plug. You don't have to subscribe to my membership, but I go through this stuff all the time. Subscribe to the channel. Please hit the thumbs up. Hit the like button and share with a friend. Subscribe. All that good stuff. U.S. durable goods orders came out for the month of August on Friday. And so I said to myself, the rollover in durable goods, we need to do a little bit more due diligence on this. And because I was kind of surprised to see the pullback in durable goods. And then I went over to Fred. And I pulled up the durable goods numbers. And you could see, yeah, we did flatten out in August. Not a good month. But then I said, you know what? Let's drill down a little bit deeper. Let's get curious here. So I went over and I pulled up manufacturers' new orders, non-defense capital goods, excluding aircraft. This is a no-brainer. People aren't flying. Boeing's got cancellation orders after cancellation orders. So let's take a look at the chart backing out that mega industry. We are breaking out. This is manufacturers' new orders, non-defense capital goods. Take a look at this read. We broke out in August. This is the news that they won't tell you. And this is directly from the St. Louis Fed. So don't let these headlines trick you. There's underlying hope out there that this economy may be doing a little bit better. I think it personally is because of the supply chain shifts. So that's it. Let's segue over and into some chart requests. Let me go over to some comments. Oh, well, you're near Albany. Okay. All right. Those are the microphone comments. Hey, Franklin. All right. I have to go to members first. I'm going to go to the members dashboard. We have Docu, PayPal, MJ for Eric. Nestor's got Walmart. Okay, I got a lot of work to do. Let's do this. This segment, folks, is brought to you by TrendSpider. Automated technical analysis. Use the link below, 35% discount off of all of their memberships. They have a 7-day free trial. Docu, D-O-C-U. I'm going to go over weekly, daily charts to save time here. If I need to go to a monthly chart, I will. Good week last week. I don't like the Stokes. These Stokes are trading down below 50. We broke out. It would have been great for a very short-term swing trade, but I would have been out on Friday were I long. Because what we did is we hit resistance. Now, what I think is going to happen here, given these Stokes rolling over, I think there's a good chance that we pull back. Let's go to a daily chart. Daily chart looks good. We broke through a volume shelf. Higher lows. I think on a retest of 209.09, it could probably be bought, but I would be very, very careful because of those weekly Stokes. Ugh. Bob, what are you doing here? Okay. All right, we'll keep it active for the week. But what I really like is this level here. The weekly chart. This weekly support level. Man, if that gets retested, I would be all in on this. For a bounce anyway. Okay. So let's take another look at the daily chart. It looks as though it's going to pop higher. Resistance is going to be at 218.45. So I would take a bite on a pullback and a retest of 212, and I would sell into strength at 218.45 to 220 per share. Stokes are looking good, but still down below 50. Expect backing and filling here. I see no compelling reason to go jumping in with both feet at current. This is a chart that's healing. It's getting better, but you got to remember about your weekly time frame. Right? These Stokes are weak, and we may rally in the first half of the week, but fade in the back half of the week. What I always like to say is rallies tend to fade, so be careful. Book those profits quick. PayPal. Good outside reversal week last week. Actually, it's an inside reversal week. I'd be a buyer on a close above 187.92. I would not buy these shares tomorrow morning. Ugh. There we go. Keep it active though. Daily chart. Yeah. We're right at resistance. We need to close above 187.25. A close above 187.25 would be very, very nice. A retracement and a retest of 180. Let's just call it 180, 180.50. Give or take a dime. Looks good as well. Stokes are improving, but still below 50. RSI, higher lows, good stuff. Exactly what you want to see. Also on RSI, I believe we have broken out, maybe. Yes, we broke out. Another support level to pull, if we do pull back, another support level to watch is right here, 184.50. Because you may see on RSI daily basis a pullback and a retest of support. That means we'll probably pull back not all the way down to 180, but 184.56. And that might be a good point to nibble. Stay small, buy the breakout. MJ. This is a weed ETF. Stokes are flatlining, which is good. RSI still very weak. Down week last week. We retested a breakout point. This was resistance back here. We broke out in July, and now we're retesting. There's not much data here for seasonality. No, not even worth a conversation. Daily chart. I think it could be bought with a stop loss right below the lows of the 24th, right at, what was that low? 10.12 per share, right below there. And we're probably going to rally up to resistance right here, 11.65 per share. So short-term swing trade, MJ looking pretty good. Let's see how it closed out on Friday. Good. Good looking chart. It's firming up. Good for short-term swing trade. Right off that weekly support level. It bounced. What else do we have? Walmart. Let's do a monthly chart on Walmart. Nah. Let's bring up seasonality for a moment. This goes back 16 years. Seasonally strong period of time. You're in the 60s between September, although we're down on the month. October strong, November strong, oddly enough. December, very, very weak. I think what we're going to do here, let's go to the weekly chart and talk about it. Yeah, I think that going into October, they're going to retest this support level here at 135.51. We'll keep this active for a couple of weeks. I think we're going to consolidate within this trading range. No rush here. I don't see a major need to get long. You still have a lot of sellers, as noted by these topping tails. Sellers above. Good daily chart. I don't see a compelling reason to buy it. You don't have a breakout yet. You're in a wedge formation. Wait for the breakout. I think it'll probably come later in the week. All right, let's go to the audience here. How much time we have? 10 minutes left. I'm looking for the symbols, folks. Docu we went over already. That's one down. SWBI. NVIDIA. BA. ABIS. Okay. All right. All right, we'll leave it off with LKNCY. Oh, is that Luckin Coffee? No, come on. That's a lot of headline risk. Way too much headline risk. But I'll go over it. I'll go over it. All right, SWBI. Oh, Smith & Wesson. They pulled back. Yeah, it was an up week last week, but it wasn't great. I would love to say go buy, but I can't just yet. We broke down earlier in September, the week of the 14th. I'm so used to starting off with monthly charts. Last week we rallied up and into resistance, rejected. Did we close above this resistance level? We did close above resistance on Friday. Daily chart. Is there a trade here? I think that, as a speculative trade, if you're going to nibble on it, fine. Nibble. Stop loss right below this lower band of support or Friday's lows, which is at 1566. I would be more aggressive in adding here and building on that position. On a breakout. And you're going to have another resistance level immediately above, right here, at 1733. If you get there, you close above that mark, add more there. I'm not going to set up an alert right now, but you get my drift. Let's go to seasonality. 16 years worth of data. September. Oh, August is bad. That's in the rearview mirror. I think we were down for August. September, no bueno. October, no bueno. November, shoots back up 53% of the time. This is a Q1 trade. Q1 into Q2 trade. So it looks like the best thing to do here is overweight in December and ride it up into February, assuming that the technicals are looking good. We don't want to trade just based off of seasonality. So that's my take. Because we need to keep in mind, we are putting in lower highs and lower lows here. So the trend is not favorable to longs. Would I go shorting it? No, I wouldn't short it. NVIDIA. Monster day on Friday. Weekly chart first. The semis were poised to move up higher on Friday because the semiconductor sector was looking great. NVIDIA being a best-of-breed name, no shock that it moved up higher. An amazing week last week, coming off the lows, closing near the highs of the week. You always want to see that. The one caveat, negative. Actually, no, we did. We closed above resistance. We broke out. We're probably going to retest 514.76 as soon as tomorrow. Looks good. Daily chart. Just barely above support. We're breaking out on Stokes and RSI, going in the right direction. Let's check out seasonality. Going back 16 years. October up, 57% of the times, up 73% of the times in September. They got that right. November strong, really up in the 70s. So NVIDIA going into the back half of the year. October weak, as you would expect with the overall S&P 500. However, it looks to outperform in November and December. Whereas, let's bring up the Tues seasonality. Yeah, where the Tues, they're consistent with the performance of NVIDIA in November. However, NVIDIA vastly outperforms in December. So NVIDIA looks good. I like it. Boeing. Let's bring up a quarterly chart of Boeing. I want to talk about that for a moment. Go to the monthly chart first. Now, Boeing is in a very precarious situation. Let's clean this up a bit. Oh, so I see what I did here. My expectation, because we got long of Boeing again. We sold it at 204. It pulled back. We bought it back. And it went through my thesis about the manufacturing trade coming back. I went over those charts earlier about mining and manufacturing coming back, and the true durable goods numbers ex aircraft. So my expectation here is that we're going to put in a higher low on Boeing, and then form a W formation, then a breakout. Let's clean it up. Get rid of that. Now, we really need to see Boeing. And the reason why I bought it back was it closed above 160 per share. It managed to close back above it. It's trading down below it at current. So if we fail to hold 160 on the week, because it ends of the month on Wednesday, I would be very concerned about us putting in a new monthly low on Boeing. So I'm hoping for a strong week. Now the quarterly chart, not horrible. An inside quarter, no new low, no new high. But we're not out of the woods yet on Boeing. Stokes is still weak and getting weaker. Typically, history has shown that we get a V-shaped recovery after Stokes drop down below 20. I'm assuming that it will happen again here, meaning the drop below 20. Will it be V-shaped? I don't know. I mean, this is a highly unusual time for Boeing, given the COVID shutdown and the lack of commercial flying. But right now, Boeing is priced for its defense unit only. Basically, if you buy it now, you're getting their commercial liner business free. So it's a reasonable price. Yes, they've taken on more debt, but still, longer term, I think that Boeing's not going anywhere except up eventually. It's never going to go out of business. You can't have Boeing go out of business. So I feel safe being along of it. Doesn't pay much of a dividend. But I don't see a compelling reason to get long right here, right now. I would be more optimistic if we were to close above 160 per share on the month and on the quarter. Daily chart. We'll just bring up a daily chart. The daily chart looks really good. It was a great day on Friday. On volume. I don't know why this is doing this. So we had broken down on Wednesday. Thursday hit support. Reversal day on Friday. We recaptured support. I hope we just move straight up into the end of the month, but you can't discount the possibility that we pull back and we retest this support level. And that would be at around 150 per share. A little bit higher, but around there. Let's go to seasonality. This goes back to 2004. Actually, 2004. October, an okay month. Seasonally up on the month. November is really good. It closes up 72% of the times. But this is the reason why you can't put much faith into seasonality. It's a tool. It's an arrow in your quiver. But historically, we're up 80% of the times in the month of September. But that wasn't the case this year. So unless we go skyrocketing up higher, which I doubt. So Boeing it's a recovery play. You have to nibble, hold it, and sometimes swing trade in and out of it once it gets overbought. But eventually, manufacturing is going to come back because we fly here, as Dave Portnoy would say. All right, ABUS. And we own Boeing, if I didn't say that for disclosure purposes. ABUS. Biopharma. Artbus, I should say. Arbutus. Looks good. Daily chart looks good. Let's come back here. Weekly chart first. How do we close out the week? Very, very nice chart. Yes, we closed down on the week, but that doesn't matter. What matters is that we had broken out above resistance the week of the 14th. Last week, we did a retest of support, rallied, and closed back above it. Great price action, despite the fact that we closed down. Higher lows on Stokes. Daily chart. I like the daily chart. Got to tell you, I like it a lot. We broke out on Friday. We have a wee bit of resistance right here at the top of this volume shelf. That's at $3.15. A little reminder to myself, we'll keep this active. Very good. Stokes, higher lows, RSI, higher lows, and add to that, the cherry on the cake is that we broke out. So I like the chart. 13 years worth of data. Do we have more data than that? No. 13 years. Let's check out seasonality. September, seasonally strong period of time. October is horrible. 25% of the time up. Just be forewarned there. But again, seasonality is not everything. Just a little bit of information to help guide us. If the technicals look strong, the only thing that seasonality should really influence is your position sizing. Maybe you want to stay a little bit smaller in your trade than what you would normally put on if you had a 70% up month score for October. Just stay a little bit smaller. I see that this is a good looking stock. I think that we're breaking out here on ABUS. Luckin Coffee, LKNCY. Did I type that in wrong? Why is this not coming up? LKNCY. I'm assuming that's Luckin Coffee. Let's bring it up here. LKNCY. Yeah, you did it right. I did it wrong. Okay. All right. Folks, this company's got a lot of issues with it in terms of SEC issues. So just be forewarned. The chart looks good. I mean, on a weekly basis, we're putting in higher lows, attempting to break out to new higher highs. The stochastics look wonderful. Higher lows, breaking out. RSI breaking out. If it didn't have the headline risk, I would be interested in it. But it's got a lot of headline risk, and that's what concerns me. Daily chart. I think odds favor bulls here. It's probably heading up higher. If we close above 330 the share, we're probably going up to mid fives, if not the sixes. There's probably a bunch of shorts in this name waiting to get squeezed. It's an OTC stock, so it's not published, the short interest data. So I'm not sure what that is, but I would assume that there are a large number of shorts in this name waiting for headline risk news to hit. But that's my take on Luck and Coffee. Let's go back to see how we are. Dollars firming up here. I bet your gold got weaker. Well, got stronger. Good. S&P 500. We have built on earlier gains from where we first started. NASDAQ 100 has faded a bit. We were up higher, a little bit of a fade. We were up over a third of a percentage point earlier. The Dow, built on gains. The Russell, built on gains. Good looking charts. So it's going to be an interesting week, folks. Just in closing, please hit the like button. Watch the U.S. dollar. 3 trading days left to go. Not just the month, but the quarter. It's going to be a very volatile week. A lot of headline news out there that is going to come between now and the election. It's going to be headlines you're not even going to be able to keep up with. You know, most of it's fake news, but it can drive the market. So just stay small. And I will talk to you on Swing Trading today on Tuesday morning, and you can catch us on the replay. I go live at 5 a.m. And there's a link below in the video description area. If you want to get alerted to these live streams 15 minutes before we go live, there's a link below. Enter your email address. You'll not get spammed because we go live again on Thursday night, and we do Thursday night stock charts live, and I'll be reviewing not just the weekly charts and how a poise is set up, but we'll be talking about how we closed out the month and the quarter. So join us there Thursday night. Subscribe, like, share with a friend. Everybody have a great night, a profitable trading week. Be well. You're welcome, everybody.